Can you hear me now? Okay, hold on. We probably had an issue there. Let me start the recording again. Sorry. Good morning, all. This is Fanny Hamzi. This is take two at 8:34 a.m., 20th of January, 2022. Job escape just came in, 55,000 up to 286. Philly Fed came in 23.2 versus 18. I believe continuing claims were higher too. Good news is, and housekeeping items that, as we promised, we're going to give you a very, very quick B 4.1 update. But before I get to that, I want to talk about Steven Sobel. He's joined our team here. Good morning, Steve. How are you? He's a data guy. He's a data geek. You can tell him from a mile apart. Okay, Russian background, uber smart, always around with a headset on and a laptop. And no, he's not listening to Pink Floyd, but he's doing his data stuff, and he's got an incredible website on data, all put together, all charts of his own. He scrubs data live. A very, very smart cookie. And he worked for Philly Fed. Not just Philly Fed, I'm saying Richmond Fed. He's one of my cigar buddies down here, and he comes to our chats when his time permits, but very good on big reports day. He's good. It's good, and he can help us on that stuff. Okay. Welcome, Steve. Hey, Tom, how are you? Hi, Stephen. All right. We do these on Thursdays, and you sign up once, it rotates. All we do is add new dates at the end. It automatically rotates going forward. It's easy. A couple of people have asked, hey, it's too early for me. I don't want to watch the video later. Any ideas? Please give me a vote here. What you think? We'll take that. Just give us a quick response. You prefer this slot this time, which is Thursdays, every Thursday at this time. It's in lieu of market time. As a matter of fact, we're giving some of that away. You know when? But we're doing it. We try to accommodate my schedule. My schedule is getting worse and worse. It's called algos. When the algos start working, you run out of time. You build them to save you time, but the ancillary activities that come with it, dealing with the programmers, dealing with the clients, debugging, testing, it's just mushrooms. Over the 3-day weekend, I think I had about 3/4 of a day off to myself. The other 2.5 I worked. But we're in a good spot. We're moving forward. We're about to release version 4.1. As a matter of fact, we put some of the charts up on our two sign-up pages. You could see this is a 10x product. 10x it? Okay. It took 14,000 here, ran it to about 143,000 in 1 year. Now, this is what it did last year. Doesn't mean it's going to do tomorrow. But this is another one or two trades. If you pick it up, you'd see 500 trades. That's efficacy. Okay? It's long and short. And it takes a second trade now if the first one fails in the first window, the launch window in the morning. So remember, it's ORB, opening range breakup. Here's some charts on the monthly profits. Not every month is going to be profitable. Why? Market changes, volatility changes, directionality changes a lot there. Here's your the average profit. You could see very small losers on the average. Look at the gains, just massive. Okay, and the cost is $555. It's nothing. It's a giveaway. Now, here's the data results by the rollout of the report. The performance report. You could see if you look at what is done. You had some drawdowns. There going to be some drawdowns, but look at the cumulative gain it has had. So here's your MFP and MAE. If you're trading systems, you better understand these two charts. If you don't understand these two charts, you shouldn't be trading systems. Okay, this is crucial of what your max run up before. What was a max run up that turned out to be a winner or loser because of the stop. It caps it. The winners run. So your stops are going to be hit. I keep on saying that to the folks in the room. Expect that. That's why stops are there. If you move your stop, you're just shooting yourself here. Here. The system is not going to change. At certain efficacy, you increase the gain, the stop loss if you raise this line. Okay, you're just going to take that down. Yeah, it's not going to happen. And this is your adverse reaction. You could see if it runs up after a certain point, you got to stop holding it. If it doesn't, it's going to be a winner. It runs up. This went against $300-400, $2,000. Look where it's finishing. 7,000 one day, one trade. Okay, probably one of the best things that I've looked at, and we also posted the charts there, both for 4-1 and 4-0. You could see it, and this will keep this going every week. It's a fun month. So we got it very organized. Why? Because we have a lot of interest. It's professional. Yeah. And it will be rolled out on a couple of systems that will trade automatically. It would say MNQs or NQs or larger NQs type of like super NQs type. But that's what we're in the process of. Okay. Let's go on to our program here. Thank you for attending. Okay. End of the housekeeping. Our first order of business always economic calendar. We want to go forward. Jobless claim just came in. By now, the results should be posted. This is Econo Day. They used to have more stuff there. They're just hopefully maybe it's COVID coming back. They have more people, or more remotely can do what we have done in the past. We came in at 286 this morning, about 10 minutes ago, and key thing is this: the change was 55, and then moving average is 241. I'm not too alarmed, but I don't like it this high. It should be a little bit lower. Although this is probably good for wage inflation. Again, Steve is much better trained at that. I'm not. I'm a gladiator. I'm in the ring. I'm fighting. I'm not. The numbers are good, but I'm price and volume. I'm CI, and I'm a skew guy. I'm looking at volatility, that kind of stuff. So a little bit different. Here's Fleet Fed. That's again. It came in at 830. That also came better. This is good. This is mid-Atlantic states. By the way, Fleet Fed follows Admiral Tico. So if you're not following Admiral Tico, you got to stop and ask yourself, what kind of trader are you? If Fleet Fed follows them, Chicago Fed follows them, and all CNBC, Fox Business, all the business channels follow Tico. So don't forget. Yeah, of course, local people too, including the foodie critic for Naples News. Yeah, so he did a write up the other day on the Baba and showed up on Naples News. So we show up for another event there, and the owner comes over bowing basically. Not to me, to Tico. Not to me, to Tico. Say thank you. So anyhow, don't underestimate the power of your dog. That's it. That's the lesson. Existing home sales coming up at 10 today. Let's see what those numbers are. The markers are okay. We have 4.6. I'm sorry, 6.4 mil. Prior consensus 6.4. We're going to see what this is the time sheet has some noise in it. I would want to see the adjustment, the reinstated or what do you call it, the revised. I want to see the revisions there, and then I want to see within this range where the number falls. But this is a key number. Why? You can see it's a red report. Red reports are important. EIA is next. I'm not worried about that. Yeah, the 20-year auction. I don't know how did this one come? I missed this. Hold on, let me see this. Coupon rate, cook it to cover. Award was 221. Oof, Murray. Okay. Steve, how long have you been doing 20-year? I missed that boat. I did. The other one, let me take a look at housing starts. I would pay attention to the all red dots. Those are important. Now, this is the second week, right? No, this is the third week. Oh, tomorrow's expiry. Oh, it's the third week. That's why tomorrow's quiet. Yeah. Last week was PPI, CPI. Gotcha. Okay. Prior was revised minor. That's a minor revision. Since 1.65 came better. And the annual rate of permits revised up a tiny bit. That's wow. Yeah. Key thing is lumber prices. Keep track of lumber prices. Yeah. I mean, there's a lot of construction down here, just Asia, but that's is unusual. This is the low tax, zero tax state, and the weather is good. And for COVID environment, people want to be down here. Yeah. It is cold right now. It's chilling. It's 58 degrees this morning. It's ungodly. Can't swim. But I think we have bad weather of this range for another couple of weeks. By the time we get to, I think Valentine's Day. This place is awesome and ready to go. So, leading indicators tomorrow. One of my favorites, unfortunately, is a black report, not green even, but I like to look at it. I want to know what's around the bend. That's why I use something called CI. Same thinking, leading or bid ask on options. That's really price, not the last. I'm more of a leading indicator because as you do more sensitivity analysis, that's what becomes crucial to you. It's not where you are, it's where you're heading. Yeah, it's like getting out of Cessna and trying to fly a 14. Different ballgame when you throttle up. Yeah. All right. With 1.1 consensus 7. Okay. We're going to see this tomorrow, what's going on. All right. As always, in the chat room, we stop and go over these. And if I don't, they'll remind me. Of course, now Steve joining us. The dates that he can join us, that's a great help. Okay. All right. Let's go to charts. Well. As I said, this is part of our PMT package. Rather than doing charts all issues, because of my time constraint, I'm giving the trade up straight on the chat room. But every so often we do a full scale, all the charts, and in there. But we are we don't give the trade out here, but we give the charts here maybe 3-4 times a month. I mean each Thursday, but at least once a month we'll do charts in the chat in the web newsletter. We are disclosing that yes, we're a little bit behind on PMT on some of our stuff that was posted, or the explanation, or we had weeks that there was no bias change. The vol was too high, didn't put a trade on. The end of the week automatic capture. We'll post it. It's archiving. We gotta get rid of them. If the two are the same, there was nothing posted. So we cleaned that. For that, we call it the PMT week. Remember, last 4 years we had infrastructure week every week. Yeah. Well, we're not going to go that route. We're Republicans, but we're not Trumpkins. So next week I've declared it will be a PMT week. That is hopefully. What does that mean? I'm going to go do some cleanup and make sure the archives are clean. This issue that we just put up is absolutely clean now. We found a mistake there. Let me address that. My apologies. On Tuesday, we had it just too much was coming here on Tuesday. It started with the login issues, and of course, first day of the week. And when I put the trade out, what you see here was not there. If you look at the charts we posted, this part was there, which is SPX. Okay. No, this is posted yesterday morning. Reposted. It showed. I'm sorry. It showed up to here this date. It showed Friday on SPY versus SPX. This has not happened in 8 years. We have posted this chart and copies of it on the website. In 8 years, as a matter of fact, it missed all the big guns that we have. They all missed it. Nobody on the hedge funds came back. Esposito, even the trade or auto trade desk did not come back and say, "What? You see the difference?" Yeah, we were off by almost 9 handles, 8 handles on SPY. Now, why is that? That's because we were down 80, 90 handles on the S&Ps, this bar, okay, and we didn't put the trade on. Sunday night. I'm sorry, Monday night. We went as a Friday close up. That was the last known public data on SPX, not the SPX. Those are the rules at the time of digest. We went long. The whole day we're dropping. Sorry going here, but I need to explain this and document this for everybody for transparency. We're dropping all day. I sent the email out saying we're not launching the trade yet. It's going against us. No sense to do that. Near end of the day, it seems to be stabilizing a little bit. And we said, okay, probably it's optimized. And this is the best choice we have for today. And because our readings were so down here, if you go to TD, these readings were such that we thought we probably are there. Obviously, we don't know the future. Nobody knows. So what happens that we launched. It was and in a rush because I didn't see that data right. My spreads were much higher. That means we're what? We're way out of the money. So what happens to your delta? Delta is squashed. That means the market has to make a huge move for us to even come close to make a dime. Okay, before we hit expiry. And also, when the MIVs are up, you can't go too far out. We were at February 11th. Just to make sure everything clear, we came in and said when we discovered this yesterday morning, we came in and said, "Huh? Sell that. Get out of that. We're going to go with A alpha." So commentary doesn't change. Okay, that was Monday night, late Monday night. That everything finished. The last proof was done. This is the last proof. That timestamp. When the last proof is done, make sure there's no errors. Until otherwise, but it still is the same issue. But the trade changed. We took that out, put this one in, and we replaced the chart. That's why these went in Wednesday. Usually, when we go on Mondays, I'm saying for I'm specifically doing this for. Let me see if I find his name here. Who was here earlier? One of the gentlemen here that's with us. Hi, Felipe. How are you? Good morning. For Heath. Heath joined us, I think, a month ago. He had some questions. We didn't launch constantly the trades. Sometimes we see the balls are too high. We sit through. We may give you just a market bias on the cash, so you know what our bias is. But it doesn't necessarily mean we're going to have an option trade on it. We have that prerogative. Time of the decade. I'll keep some prerogatives. My job is to save you money, not make you not be a cowboy, a buckaroo. Okay, it's easy to give you trade, excitement of a trade, but that's no good at long term. If you want to be there for a long term over many trades, you gotta realize you gotta show some respect with the power you're involved with. It's like scuba diving. You gotta respect the ocean. Ocean will always win. Always win. So we recalculate everything, put a new trade out, went out to you guys. Our goalpost hasn't changed. We are where we are. But let's look at why we have that opinion now. That's because we are extremely oversold by any measure. We are at the below 150, negative 150 range that Miriam McKellen told me. She's the one who invented this, not Sherman, the husband, but the wife. Before she passed away, she was a member of our user group at Mask. She said, "Listen, this is what I look for, negative 150. We're beginning to enter that. If you go to our website, there's a write-up on this. We talk about launchpad mode. Launchpad mode is when we get negative 270. We're not there. This is a launchpad mode. And you saw what happened. Very nice run-up. We don't have it yet. And yesterday we closed at the low of the day. Another big day down. Futures are up right now. Let's see. We're up at 24 or 0.5% on the ES. Let's talk about percentage. 1% on NQ, 0.5% on Russell. Okay, and crude is down 33%. This is the futures. By the way, H22 is the lead March contract. So look at the trust. We don't see that often. If you go back to our charts, we have to remember there's an archive there. If you go back to archives, here we go. There's archives. You go there, you could see all the years. Just go back when this format started. I've been tracked by Time and Digest since 2003, but this format started as a newsletter. You could see they're all there. They're all there. And every time you go there, they're all there. Again, we're going to clean up 2021. Okay, where's 2022? Oh, I got it. Oh, hold on. Am I? I'm logged in. Yeah. So, okay, we're gonna have somebody to look at. Okay. I know it's what do you call it? I know it's on the server. I've seen it. Okay, no worries. We'll get to that. Nancy, you may want to note to that. The archives are not showing up properly. To Larry, please, for me. This should be 2022 here. Okay. This shows correct. This could be because we went on a new server. I know the data exists. I've downloaded it for like last week and the part of January. It just needs to be displayed. There's must be a bug there, Nancy. Please confirm you heard me and you could the copy and send Larry a note with a copy to me. Thank you. Larry's our CTO. Nancy and Larry work together quite a bit. Yeah. Again, last midpoint. So that's the trade we're in. All right. Notice we went a little bit shorter. We usually go 3 weeks. Why is that? Again, a little education here, guys. When the vols are too high, the snapback is shorter. So don't go further out. We were at 11. We were sitting at 11, February 11th. Going too far out. So I shrank that. I owe that to Admiral Esposito. 27 years DPM at SIBO, Wolverine founding partner, and then 12 years at Single Stock Futures at One Chicago. Just remarkable person. And now for the last 5 years runs a biotech fund. And he trades a lot of our stuff. He's the ES guru on OTF concept. And so anyhow, just he's too busy. That's our problem. He's just way too busy, but good people always are. So I want to make sure we're clear where we are on this trade, okay? And as you know, I try to do one-on-ones as much as I can, but it's getting less and less possible. This is our process, using technology, sharing everybody. Also, this gets recorded. It's transparent. It protects you. It protects me. Boom. All right. I can't do one-on-one on a trade. I can do explanation of a system, how this thing works, but I cannot go into a trade. It has to be here. Why? Again, newsletter writer, I have certain restrictions. I don't have full freedom of speech because your money is involved. Yeah. CIs are to the downside. Oversold here, 242. Now, remember on NASDAQ, things get dicier. You got they're almost 400 there. You see that? Yeah. That's a different scale because in general, that's how this thing works up. High beta takes its toll. This is all-time high. We had a newer one here. The techs are not favored. They've been beaten up. We did get a uptick on the up and down volume over 5 to 1. Down 12 volume. 5 to 1. This one's a little bit lower. And we're approaching -3 sigma. That doesn't happen too often. You could see here we hit for 3 days and rotated back up. I think we have multiple items. You got COVID, you got inflation, you got Russia, and all the political BS. It's all occupying all of our ears and eyes, and it is impacting what we're up to. We have had a huge run, something like 14 years, and especially last year. Nothing. You can look at the SPX what they did last year. Let's go here. It's just been incredible, absolutely incredible. You can see part of it started in 2020, but look at this run. I don't think we have had anything this run like this before. So, and it makes it very difficult to trade. By the way, as an investor, you're fine. As a trader, very difficult. Okay. Let's go to DT. D-trenders. Okay, this is the bad count. This is a count that's not good. 1 negative, 2 negative, 3, 4. So all 50s are broken. We have a death cross here on Russell. That's not good. Okay. Thank God we don't have death cross on anything else. But Russell's a leading indicator. Look at the sellouts. Okay. So if you have Bauer stocks, get out. I am sending a note to everybody saying VXRT, I'm out. Yeah. It went below 6, and it was a good test. A couple of times we sold it out, came back, buy it again, went up, but not happening. And they had that window. Not saying it's not going to happen, but when it breaks certain levels, I have to tell you that. Now, if you're like my sister, she's from a different tribe. Okay, so since she doesn't need money because she never spends it, and she never sells it either. She keeps these things up like a pickle jars. I don't think she'll ever get out of XRT. We had a fight on the what do you call it? What was the name? Netflix. And at the end, she told me I didn't know what I was doing because I couldn't forecast another 20% run on a rocket ship. And she's an accounting major. She ought to understand numbers, but that's a different story. Let's not go there. Anyhow, this is not a good omen. Look at the support it broke. Okay, we're not going to go up with this breaking down. So I could see yesterday. I'm sorry, day before yesterday. I could see Monday. It was dramatic, but not here. So at 200 day, let's see what that happens, and that's it. I mean, I cannot say let's see. That's how you get into trouble. At somewhere in here, you got cut it off and say we're going to do it again. Unfortunately, I'm not good at shorting the whole either. This is way down here. Listen, if it's the end of a day and like yesterday, remember Karthik, that comment you made, you rascal? Yeah. This is SAC graduate, so that's what happened. Alum, SAC, Stevie Cohen advisors alum. So he was calling for a low of the day to be broken. And as we got closer, he'd get the heads up. And we had a discussion about that. But nonetheless, I hit the sell buttons because that was a right call. For a short period of time, you can short the whole, but you cannot short the whole like dailies. Big risk. Yeah, with so many of the 50s and one of the 200s being negative, this is 6 out of 8. No, 5 out of 8. I can't add. I went to school here. What do you expect? Yeah. So 5 out of 8. This is not good, guys. Now, are we getting to a bottom? Yes. Yes. Where's the bottom? Nobody knows. But we can only surmise. Remember, bottom is a rear view mirror. Do you feel it when it's there? Yeah, probably some option guys do. I think we're very close. But is it today? Is it tomorrow? And also, we need to retest that for a bottom to be valid, you need the W, just like at top you need the M. The M you have on the top like this, M versus a W. Okay, so this was a good run-up mode, of course. Then the resistance came in at 50-day. So SP1 Momos, there you go. We broke center line on SP1. Not good. Okay, not good. And now, again, Momo says I'm near a bounce. So we could see that event today, although we're up 22 handles on S&P. This is all S&P based. We could see that today. I really would want to see a flush. That means just sell everything. Boom. Baby with bathwater, and that's the low, but we're not there. And we're getting too close to this. What is that? That's a -3 signal. Okay, we're approaching to a negative signal. Nothing new. We have showed that. No signal here. No big lows, or because we can't expect to have a big 52 weeks low. Why? We're so high up. So that's not happening here. So that's not giving us a signal. The highs have no meaning right now either because we're so far away from all-time high for the index itself. This is the components. So neither of these two are helping us here. Okay, but Momo is -7. So let's see where we are intraday today. I do post on our feed a little bit, but to the extent I have time, and so on and so forth. One of the things I post is this. We're going to get into that in a second. Here's your VIX and VXN. Vols are rising. It's a risky proposition, but hopefully, yes, and this is today. We're pulled down. Remember, VIX runs overnight. By the way, I'm hearing that they want to run SPY overnight, just like a ES, and even talk of SPY options. So that middle of the night you can't sleep. Like some of you guys I know, you could jump up there and say, "Oh, ES is up. I'm looking at ES OTF. Faris chart says buy. I'll go and buy some SPY." Hey, more power to you if you want to. I don't know what kind of volume we're going to have, but it got to be some because volume on SPY is so high. Also, it lowers the craziness around cash open. Now, I don't know what these guys. Wait a second. I think SPYs run early in the morning, right? It starts at 8, I think. Am I right? New York time. Whatever that is, they want to go 24/6 with that same hours as ES. I wouldn't use it as a hedge. I'm not into that. Okay, that's not. Take direction. Look at Anthony Cordell. Poor guy got a heart attack because of that. That's just not the way to go to doing a hedging. No. ES versus a SPY. Just too risky, guys. Take directional, bet less. The problem with that hedging is that you're chasing for nickels in front of a steamroller. You don't want to do the timing. You don't want to do the charts. So you're just chasing the incremental change in the ES versus incremental change in SPY. First of all, you need a lot of money. You can't do it with a few bucks. Secondly, your risks are huge. All you need is one day you get a heart attack and then you end up in Florida. Don't do that to yourself. Stay where you are. We have plenty down here. Yeah. With all respect to Anthony, I like Anthony, but he knows and I know that process is just difficult. And the smart one with his wife just said, out. We're going to Florida. We're getting out of here. This rat race you're in. Yeah. He was too young. He's a good guy, great guy, but wrong process. Yeah. Anyhow, I think he's much wiser now. If you look at what he posts and what he writes about, he's much wiser now. Good for him. He's a good guy, very good guy. All right. But he's remember, he's a Roman, so that's not an issue. We'll discuss that later. That's what we call him Mr. Deli. That was his call sign, D-E-L-I, for Crudel. So we call him Deli. Tico loves his prosciutto. Yes. All right, so let's go here. All right, the VX spread. What time is it? 9:04. We got to hustle. We slowed down here. Intraday yesterday was very good. We came and tested it one more time. Yeah, this was the overnight. This was overnight low. We came and tested and we took it out. Okay, yeah. By 4 p.m. yesterday, took it out. This was into the intraday low. This is what Karthik was talking about, except on the Nasdaq side, on the NQs. Look at the corresponding values on the spread. This is a 30-minute spread of we're running. I'm sorry, we're running. F22 is gone. That's history. Let's take that out. We're running, and G is overtaken. No, not yet. Okay. Oh, this is so. This must be. Let's go though. Make sure we're on the right track. Jack, hold on. Oh no, no. Hold on. No, that's the wrong one. I gotta go to symbols. I'm sorry, guys. Let me double check. If we're wrong, no, F is gone. Wrong. Sorry, my bad. So we're at G contract. Yeah. We're at G. Yeah, and then so that's then we're gonna go to May. So we're long Feb, and May is K. This is again, these are future contracts. It's 1,000 times the price. So the notional is big area for the hedges. Okay, that's more reasonable. Yeah, not necessarily value, but the shape. Yeah, because they get out of sensitivity area, and so you don't see this correct shape. So we're long G contract and short K. That's how you create the spread. Okay, and that's a term of structure. I'm saying this is a term of structure. You could see. Okay, that's not bad. That's what you expect. If the front month, that's actually bullish. If you look at yesterday, front month was a little below that to the upside, then you know there's a problem. Yeah, but that's the right term structure. You're slowly increasing as you go further out. Why? More unknown, right? So look, but when the front is very unknown, that's near the low. So that makes sense. As you know, if it hits zero, our data shows that should be the low. We're not there yet. So do we have another test left? I would suspect that. For sure, no, nothing for sure. Okay. That's why we use a number of tools. So it's a preponderance of evidence, not beyond a reasonable doubt. It's a civil case, not a criminal. 15 now, reading on SP2. I posted that a couple of times. The reason I went into that trade on Tuesday, even though it was a wrong trade, was this baby had dipped below, and intraday it came down a little bit, and then I'm saying it came down. Let me go there. Yeah, that's 19. Yeah, it came. It was at 26, I believe, 26 and a half when the day started at the cash open. We dipped down. I said, okay, this could be it. We went further yesterday. We had 15 now. This is bounce area, guys. I don't care what you believe in or why. And but if you got the email and dog didn't eat it, you know this is a bounce area. Over the years, this area is bounced. So could it be today? Most likely. Could be intraday. Yes. Could be already seen. That was yesterday close. That's possible too. Okay. Markets are continuous now. Remember that. We don't have a choice. That's how things are. Why? Because we involve everybody. First, they give them a short button to the U.S. Now they give all the Europe and Asia and all that to trade our markets. When you do that, I'm talking about retail level, not professionals. As they start coming in, now your data becomes global, so you have no sleep. Yeah, I was talking to a friend of mine in L.A. He changed his bed. He says, "I can't sleep. I get up in the morning at 2 in the morning, 3 in the morning, go and start trading for a while." As a decent, good trader, Marshall Fried, we did the IB together, but part of it is also that he's very, very rich. When you have a huge backing on the table, you tend to win well. You know, this is, as one hedge fund the other day was telling me. He says we were talking about size for to get involved with me. He says I can't go small. I'm not interested. I don't want to set you up for failure. I'm going to give you a lot of fuel. Your job is to win. I've been there, done that. The people don't realize the risk of fatal incidents of when dealing with small accounts. People just shooting themselves in the head. He didn't say Russian roulette. He didn't say shooting himself in the foot. He said shooting himself in the head. So, um, so, Just be wise, be wise, because they have firepower. They can sit there and take some heat and keep buying into it if they want to, if they see the direction. All right, let's go into. Oh, by the way, last item here. Did we do this right? We have a rendezvous coming up. Remember, stock RSIs are very good. The three of them, the triple stock RSIs, which is basically a code that it's not my code. It's my. I'm sorry, I wrote it, but it's not my code. My idea. This is Tuchar Chande. I highly suggest you read his book. It's incredible. If you can find it on Amazon, it's on a bibliography or what do you call it? Suggested readings. Yeah. But here, this is it. This is a rendezvous point coming up. You see, it's at one is about 0. The other two are going to catch. So I think we are very, very close to that low. Again, preponderance of evidence. Okay, 2 words here. Karthik, what's that? Come on, Karthik. You're the smart one. Come on. I know you live on the left coast, but that's a separate issue. It's bond vigilantes. They're here. You could see when you take the 3-year, that 3-year back. Let's see. Where's it 2? I think it's 3. How far back do we go? Oh, it's 2 years. Okay, let me put 3 on. See, what do we get at 3? Where that line is? Oh, way up there. I see. Okay, so no, I see. Okay, I know what I did. I know what I did. Sorry, that's all time high. I know what I did, Jack. Hold on. Let me go back. It's taking back. It's just edging out. I'm saying staying in the realm of COVID. That's what it is. Yeah. I don't want to believe it. I have a hard time with it because of what it's doing to average person out there. Listen, you and I are privileged. We go long and short, but average guy out there is getting decimated. This thing that COVID is going to be with us is not something I like to embrace. Okay, we have to deal with it. No, I think we need to resolve it. And part of it is vaccination. I mean, I would do boom. All transportation has to be vaccinated, and I would have IDs. This is where government needs to be big and act big and control. Yeah. Otherwise, we're gonna have this thing continue, drip, and so forth. Yeah. So we use the 2-year just to see within the realm of COVID where we are fit. Because what February 12th is around the corner. Remember February 12th last in 2020? Anybody remember what happened on February 12th, 2020? Let's go to the SP1. Anybody? That's that line. That's that break. That's when Admiral Tico says, "Daddy, sell them all." Why? He sat on a conference call. Remember when people talk to other, country to country, the staff is also on a call. Well, he was on a call when I talked with that guy from CDC when he said we have no chemical reagents. Chemical reagents. 2 words he said. He hanged up. Chemical reagents. That means our testing is messed up. If you have no testing, you've lost the ball game right there. 38% in 5 weeks. Welcome to America. Remember, as Admiral Tico once said, don't forget, this is my markets. You happen to trade in it. And so victorious he was. And of course, our webinar said March 21st, spring equinox, Persian New Year. Look for that. Persian New Year came on the Friday, March 20th. Okay. 21st was beginning of spring. 22nd was Sunday, 18,000. The day Trump got elected, that was a Dow level, was broken. 18086. Good luck. YM for June. June contract YM was 18086. Sunday night. Monday, 23rd was the low. You can't get it better than that. That's why we bow to Admiral Tico. He called it, right? This is a different ball game now, guys. This is a totally different ball game. Now the vigilantes have come in. And look what's happening there. Look what the 10-year is. Again, cars, housing, long-term investments like skyscrapers in Manhattan. Look what's happening here. I mean, is it good to me? Is it good for me? The way I read it, yes. But average guy will have a hard time with this probably. But I think the economy is coming back. Part of this bump up is also inflation because the goalposts are bad. Or we look at TTUM trading 12 months. We had disinflation last year, this time. So those are low, and also supply chain issues because we had to shut down the economy. But we didn't do it all at once. We did drip, and that's another problem. I'm more into take the plunge. I'm more of a CPA guy that says take all the write-off this quarter and let's clean up the deck and go. We're not doing that. But then again, you're lucky I wasn't born here. If I was born here, we have a different government here. Trust me. Have you heard my game plan? It's on Stocks and Jocks. Yeah. The phones ring up. The producer says, "Hey, you come again. I can tell you're here without even looking in the booth where we talk." He says, the phone. I said, "Well, I'm not in here. I'm not controversial, but I'm truthful, and sometimes truth hurts. Are we good here? I think so. All right. Let's go to one last chart here. This one. Okay. Yeah. Okay. This is the problem that's bothering me. We've talked about it last week too. If you look at, sorry guys. If you look at, this garbage. Okay. So sorry. This is Google. Stop seeing this ad. Stop seeing this ad. Yeah. So not interested. All right. If you look at it here, let me go a little bit bigger. Okay. Okay. So if you look at it here, you see what's happening. We're breaking down again. Look at the difference between those two MAs, 50 and 20 and 50. Now, the separation is not much. I've always said, watch for the separation. Why? Because it worked for me. This is all this market is all about. See what works for you and use it. We'll be getting it as early, but look at the dramatic drop of stocks for the 200-day. Okay, and are we beginning of a bear market? At some point, I'm gonna get short. It certainly behaves that. If you sell the rallies, you're making more money than going to buy the dips and hold on. But remember, it's like as Jerry Seinfeld says, it's like a relationship. Markets are like a relationship. You can't break them. And then he refers that to Coke machines, cookie machine vendors. You can't, flip it in one move. You got to shake it, and that's what they're doing. They're shaking the trees. Why? Because there's a tug of war. You have bulls and bears. They're going to go at each other. At one point, one's going to win over the other one. So, to me, that's not good at all. And we're getting to this 55 to 45 range, which is a big, big indecision. Basically, really around this area is any part of that. Doesn't have to be at 50. It's a 50-50 move. It's a gray area. It's a band from 55% to 45%. That's where it could go either way. We could come in, wash out, and go back up, or we're heading lower. Okay, so and I think part of that is we got to get people vaccinated. They don't listen. It should be a force majeure. I mean, when it comes to public health, I don't know about freedom. Hell with that. We got to protect everybody as in aggregate. So, but that's where I come from. One more chart we need to go over. Again, no politics. This is a health issue. It's policy, not politics. Okay, let me go back. I want to show you this one, guys. Getting some traction on Twitter. There we go. Okay. And now, as you know, sometimes I post this hourly. So let's go to our hourly chart also to see why. Because that question came up with a friend of mine the other day saying, why are you doing it this way? Come on, there you go. Okay. There's a lot of data. Yeah. This is up and down volume. We do a ratio according to Larry. Larry is, and we have a poster. If you guys want, I'm more than happy to send it to you. It does sit on our, hold on. Let me open it up here out of your area so I can remember what it was. Hold on. Mm-hmm. It is, we actually downloaded it. Hold on. Is this, hold on. Maybe we have it in our downloads. 1 second. A little bit easier. Okay. Okay, hold on. Downloads. Hold on 1 second. What I'm trying to say is we somewhere in here. Oh, there we go. Okay. Yeah. Okay. Hold on. Yeah, that's right. Okay. All right. So there we go. So here it is. It's a PDF. We are featuring it now on our website, at least on our server. So we distribute to friends and family. But anybody else who wants it, write to me. We'll get it to you. Beyond market volumes, or I can send it to all. Doesn't matter. This is Paul Desmond, a good friend. Met him only a few times. So he's a very, very sharp guy. I think he passed away recently. A good from the years I was at Mass. I haven't been in touch with him since my Chicago days. But Paul Desmond ran Lowry Reports, Lowry Research. and then there's a report said there's capital management. There are multiple companies. I believe they're out of Tampa, if I'm right, or maybe Orlando. Okay, you gotta read this. You gotta read this. This comes with what this volume stuff means. Don't look at that chart without it. Want to have you send it to you guys the way I interpret it. And of course, two people I follow there on Twitter. Let's see, where's my Twitter? There's these two. You want to go? Let me go there quickly. I'm going to show you a sample of that, what I post there, so you could see. Walter Deemer is one of them. Okay, hold on. There we go. There we go. This one. This is what I'm talking about. Follow Walter Deemer or Norseman. These two are crucial. This is Bo, which is one of our members. They're very good at reading this thing and interpreting it, and we post it probably a couple of times a day at best level. You know, at our best level in terms of time wise. No quota, no obligation. We get to it when we get to it, but we do put it up for you there for you guys. And what it does is it shows. I mean, you go to hourly, it shows you intraday what we're doing. The levels are negative 90 and plus 90. The key thing about that writing that I need you to read is and I'm not perfect at it. That's why I follow those guys until I'm slowly learning it. Is that how the multiple these line up, the 90%, okay? We still have not got it below 90% flush. And of course, they're talking mainly about S&P. I want to look at both markets. We have not. So that said, we still have in my mind possible drop down. It's 9:20, guys. I need to wrap up. Any questions for me? This is the daily part. You can see how that's happening daily. It's rare when it does that, but you can see what happens right afterward. Especially look at this. That's a very bullish divergence. You get one really low reading, comes back up, everybody's happy, all the bulls back in, novices. Because what? We talked about W, right? This is the first part. That's the first low. The second low is that matters you want to buy. That's where the pros come in. And it's higher. And the price lower. I bet you the price would be lower. Let me go here. Okay, this is yeah, see that? It came even lower than that, much lower. And guess where it turned? Even before the market turned. So what are they doing? They're accumulating. While you're dumping it, you're so scared to death, the pros are accumulating it. Pay attention to this. Larry, research was always for institutional, not for retail. So. Question from Michael Becker. Yes, sir. In the past, I've seen many corrections eventually hitting 15 minutes. Correct. Any thoughts? Possible. Yes. I mean, rear view mirror is easy. We're looking through the front windshield. This is 200 day. You're right. We're down. I know Nasdaq is at least 10%. We could also say crash at 20. Is that possible? Same answer. It's hard. But I think we would know a little bit sooner by VIX spread, by advanced decline. That's the stuff is using a lot of these, and volume. So, for example, here SP2 has got this has got some advanced decline involved in it as a small brethren of SP1. This is mainly, and it's for S&P, all the big names. We don't throw in all the NYC with all the junk and bond ETFs and all that crap. No, just S&P 500, the best 500 horses we have in the race based on product management and balance sheet. Same thing true here. Although this is a mixed bag of a few things, but this is probably our best trade indicators has not changed. We only add color features to it as more capabilities of trade station came in. This goes back to 95, no, 98, 97, 98. Yeah, 95 is IB. Yeah, 97, 98, and it's been remarkable. This also says we were down there. Now, it does, again, I want to see the confirm. I want to see this. I want to pull down a little bit higher. Can we see it today or tomorrow? It's a little bit too close. I would prefer to see it Monday or Tuesday. Now, remember, what's on the calendar next week? The Fed. The Fed. And what's historical with that? With Jerry. Okay, we'll call him Jerome or Jay. The problem with Jay is every time he shows up, we market sells. I think once or twice he has rallied. He is a master at selling the markets for us. So you saw what happened in the last meeting. Yeah. So that could be it. That event could be next week. Good question, Michael. With that said, I'm going to get out of here, guys. We got to go and trade. 9:24. Thank you all for attending.